Hello, welcome back to YouTube Stock Portfolio, the portfolio where you pick the stocks. If you want to pick a stock, all you got to do is leave a comment down below. If it's the most upvoted comment, that's the stock I will buy or sell. All you got to do is choose what you want to do, and that's what I'll do with my portfolio. So if you watched last week and you're looking to the right here, you can see that the stock we bought was Procter and Gamble. I decided I needed to get a little bit away from tech, and if you look at the week chart, you might think, oh, almost even, but in reality, I am actually filming this a little bit early, and I film and release at the end of every Thursday. Today is Tuesday instead, so we're actually about even. It looks like we're a little bit down, but in reality, I think we might be a little bit, oh yeah, we're a little bit down by 6 cents. So this is the second week in a row that we've been down. Hopefully that trend does not continue and we eventually go back up. However, we still have 2 more days until the real normal time when I address this. Anyway, I have a pretty interesting video for you today talking about my investing strategy and the way I invest outside of YouTube stock portfolio, which is obviously somewhat of a pretty bad investment if I'm not even choosing the stocks, if I let you choose the stocks. Today I wanted to talk about my investing philosophy, what my actual plans are outside of YouTube portfolio, which if you've heard my previous videos, you know is really not even my investment. It's run by you. I'm just the one who puts money in it. You're the one that actually manages it. So I've been investing for almost 10 years now. It's not quite 10 years, I think it's probably 9 and something. Not entirely sure on the math or entirely sure when I started. Over the course of that time, I've invested in pretty much everything. I've had crypto, I've had penny stocks, I've done algo trading, I've done fundamental analysis, I've done sentiment analysis, I've even gone into technical analysis. All of these methods have been in like my past 5 years or so-ish of investing. In my first 5 years, I had a completely different approach. All I did was when I saw a cool company, I bought it. So, which do you think performed better? If you guessed that my first 5 years of just investing in companies that I thought were cool would be better, then you would be right by a long shot. The companies I ended up buying included Apple, Microsoft, Google, Netflix. In fact, pretty much each of these companies had better long-term gains than any of the other methods of investing I used. Over my second 5-year term, I kind of tried to go back to this method, but I never really had any success. It didn't work nearly as well. I either always jumped in too early or too late and never really made a whole lot more money in the same way. So now I simply invest in the market. It's pretty boring as possible, but it's sustained, it's continual, it's predictable, it's easy, and it's everything you should look for in a long-term investment. So if you don't already know how compounding interest works and why I'm investing a bunch of money in the market, it's because it's pretty much a guaranteed expected return of 8%, which you might think could be beaten pretty easily, but the almost guaranteed part is the part that is really crucial, because if you look at the numbers here, then you can really understand how much that can mean to a portfolio over time. So if you're seeing this equation and you're getting scared, don't worry about it, ignore it. All you need to know, Z is the amount invested per month, I is the amount of interest you would gain. So in this case, the market returns 8% annually on average, so that's what we're looking at. Down here is the number of years invested, and right here is the number of dollars you would have. So that's a million, that's 2.5 million. So if you look at the numbers here, see, even if you only invested $40 a month, which is a very small amount to invest, you would buy 65-ish years, 64 years out, you would be a millionaire, which is incredible because that just means this 8% can do a whole lot for you. All you have to do is let it do its thing, and the numbers get even cooler when you make them bigger. So you can see how much that graph changes. When you hit like 500, you can see that you would be a millionaire around 33, and then the coolest part is it would take you 33 to get your first million, but your second million would come in what looks to be almost 7 years. So it really just helps your money grow really slowly, but really guaranteed. And when that money is growing by 8%, it can become really big when you have a lot of money and when you're really far down the line.
So that's why that's my investing philosophy, a really big part of it now, because the more and more you invest, the more and more money you end up having, and the quicker you can get to some of these really cool milestones. So 4,000 a month, which is really pretty much impossible for most people, would get you a million by 12 years, which would just be incredible. So when I went back to this investing strategy of just investing in companies that were cool after a few years of trying other things, why did it not work? Well, first I'd like to say that it didn't kind of stop at a switch. It was more of a fizzling out. Those companies that I told you I bought really early on and kept on to for a while. Some of the companies I started to understand how the market worked, and some of the companies I bought a little bit later were not nearly as successful or nearly as cool. But when I went back to this method, why did it work again? Well, I think a lot of that has to do with once you know the indicators and other positive stuff from a company and how people look at charts and how people value companies and how to read their earnings and good and bad signs, you get way too far removed from the actual product and how much people like the company and want to spend money on the company. On top of this, I think as you get older, you get more stagnant in the things you use and are more opposed to change. Thus, when a new company comes along, you're really less likely to adopt their product or to really understand its market. And you also learn about diversification. When I was first investing, I would go pretty much 100% into every single stock that I was investing, meaning that when my Apple stock doubled, my money doubled. Since I now understand that this is a terrible idea, I just couldn't bring myself to put all my money into a singular investment. So overall, what's my investing philosophy? Well, I just keep buying the market unless I see a company that's doing incredible things. Not necessarily a stock, but a company. The difference there is that a stock, you look at the numbers, you look at the charts, you see the history, and you determine if they're a good buy from there. I just look at a company and say, is that company serving its customers really well? Do the customers love the company? Is it expanding? Stuff like that. In my own little sphere, are people loving the product? If they are, then I'll buy some shares. But if I don't find a company like that, that's okay. I'll just keep investing in the market. Overall, I think your sphere of influence is the only advantage you have over the really smart people on Wall Street and running hedge funds and stuff like that. Because your sphere of influence is the only thing that matters in the market that they can't really measure. If you're looking at price to earnings ratio or something like that, well, everybody can measure that. It's easy. But if you're looking at influence in communities of a company and how people like and enjoy their product and how much they're going to continue to use it, well, then in that way, you can determine that a company is doing really well. And in that way, I choose companies to invest in.
Thanks for watching. Remember, leave a comment down below if you want me to buy or sell a stock. Check back in next week to see if our portfolio is up and to see what stock we purchase.